Is it time to make an alpha bet on Alphabet? That's the question that me and many other investors have been asking recently. The stock is down over 20% from the all-time highs of the NASDAQ and has massively underperformed both the NASDAQ and the S&P over the past couple of months. However, the company has bounced back from very slow growth in December 2022 of 1%, and for the most recent quarter, they reported 13.6% year-on-year growth overall. The hedge funds continue to be interested, with Alphabet being their fourth largest big bet, which is roughly where you would expect the stock to be, given its size within the US economy. And also among the super investors, which you can track on DataRoma, Alphabet is a very large holding of theirs too. This technology behemoth is trading at a forward price to sales of just 5.7 and only at 19 PE. This is some of the lowest levels we've seen it trading at since April of 2023. Meanwhile, the company is actually starting to roll out some very impressive AI. And what we've got to remember here is the vast ecosystem which Google can integrate this artificial intelligence into. So join me as I give you my thoughts on whether Alphabet shares are a good buy at the moment. So as I mentioned, Alphabet shares, they have come down quite considerably from their highs of $190 a share, and they crashed about 20%, now trading at $150 a share. But at the same time, Alphabet have seen a re-acceleration in their revenue growth rates. We can see the growth rates by segment here for the most recent quarter. You can see how, in March 2023, most of the segments were really struggling, and a couple of the relatively big ones were actually negative, most namely YouTube ads and Google Network. They were negative, right? Google Network is still negative, but YouTube ads back up to double-digit revenue. And this Google search and other revenue, which actually makes up over half of total revenue, that's now back up to 13.8%. And Google are growing 13.6% in year-on-year revenue overall. Their Google subscriptions is growing nicely at 14.4%, and their cloud segment is growing the fastest at 29% year-on-year revenue growth. This is faster than Amazon Web Services at 19%. And just marginally slower than Azure, which is Microsoft's platform, at 31%. It is worth noting, though, that whilst Google have a significant position in cloud, their market share is only 11%. So they're significantly behind Amazon Web Services at 31% and Azure at 25%. As you can see, because Azure is growing 31%, they're taking market share away from AWS. So on the one hand, you've got pretty attractive growth. Considering Google's a massive company with a wide moat, you've got really attractive growth for very cheap multiples. And 19 PE for this kind of growth in this market is very good value. Now, if you look at the results on a nominal basis, you can see that Google search, it still makes up over half of revenue. So, compared to Microsoft, the actual cloud segment is not that much. 10 billion of quarterly cloud revenue, which is a lot, right? It's still 40 billion for the year, but on 84 billion of total revenue, it's not much, right? 12% maybe, but Google search is well over half. And I think the biggest risk with investing in Google is the development of AI and large language models. It is a threat to their core search operation. And this is what this analyst on CNBC talks about when considering investing in Alphabet.
Where do you think, you just said something very tantalizing, and that is that Google is its commanding position in search is under attack. How much smaller will their market share be, do you think, in 5 years?
I think that's the biggest debate on Google, and it's an ongoing debate. But we know one thing, which is once you're at 90% share in search, you can't go higher than that. Yeah. There's only one way to go. And the other thing we know is that the Department of Justice has picked this particular time to come after Google search and its monopoly, because they're saying as we transition from just search to search plus chat to AI enhanced search, don't want Google to have a monopoly. That's in what they're saying, and therefore Google is going to have to fight uphill from now.
So I understand on the surface that this argument does look pretty bearish for Alphabet. They've dominated search for probably the best part of 15 years, and you can see how other large language models and other types of AI could start to erode that moat just a little bit. For example, I'm using ChatGPT much more than I used to, and using Google probably marginally less, although I wouldn't say significantly less. But if you think about also with search, the overall pie, I think, is also massively going to expand with artificial intelligence. And think of all of the new types of search and the new types of content generation that you can create. And I want to take a few minutes to show you a clip from Joseph Carlson, who I give a lot of credit to in this video. So thank you, Joseph. I want to show you a clip from his YouTube channel where he discusses some of the new features that Google is showing in their AI presentation about the different types and breadths of artificial intelligence that Google are working on and types that they can integrate into their existing ecosystem.
Today, I'm so excited to introduce Imagen 3. Imagen 3 is more photorealistic. You can literally count the whiskers on its snout, with richer details like this incredible sunlight in the shot, and fewer visual artifacts or distorted images.
They also shifted over from images to music with Music AI Sandbox,
a suite of professional music AI tools that can create new instrumental sections from scratch, transfer styles between tracks, and more.
They talked about Veo, the new generative video tool where it can take text prompts like a fast racing car and it makes videos from it. Now they say that you can extend the amount of time, you can change the context, and it's in 1080. So the actual resolution's pretty high for generative video. The thing that impressed me the most about Google's capabilities was not how good it was at one particular thing, but how many things they're working on at once. That was the overall feeling I got from it. With OpenAI, you had a super well-polished tool that was really good at like one thing, which is being an artificial intelligence assistant. Now, I think that's a good strategy from OpenAI because that's a very good thing to be good at. So they're going in a good direction trying to specialize in this artificial intelligence assistance, but I compare it to what Google's doing and they're just taking different approaches. Google's breadth of things they're working on is so much wider. They're auto-answering emails, auto-returning products, they're generating different videos, they also have the artificial intelligence assistants, and then it continues on. They're wrapping AI into their search engine. The advancements in their search engine are what I believe are the most important part of this meeting.
Find the best yoga or Pilates studios in Boston, and show you details on their intro offers and the walking time from Beacon Hill. You get some studios with great ratings and their introductory offers. And you can see the distance for each. Like this one, it's just a 10-minute walk away.
This is like Google search on hyperdrive. Google search where you can add in a ton of different context and you can make really elaborate questions and it will understand the advanced context. Think of more examples of this advanced Google search where you can ask it to create meal plans or trip plans and it does it for you.
And you can export your meal plan or get the ingredients as a list.
There's been a lot of chatter about LLMs like Proximity or ChatGPT taking market share from Google search, and I just don't see that happening, especially with this advanced Google search that interweaves Google search with artificial intelligence, giving it these advanced capabilities. I think it's now becoming even less likely that Google search loses market share. Google continues to add on all these little AI advancements to Gmail, which are things that they couldn't do without these investments in AI and their infrastructure. And again, no one else can replicate this because no one else has Gmail. It's just Google that owns these properties. Gemini now has an advanced trip planning tool where if you're focusing on a vacation or traveling somewhere, you can lay out exactly where you're going, how long, the type of money you want to spend on this trip, and it will give you an entire itinerary tailored to the exact thing you're typing in. In some ways, it looks like Google's actually expanding their lead in search and information. They're not losing it.
Yeah, and after watching this demo, the one that Joseph is highlighting here, I became a lot more bullish on actually understanding, look, Google has a huge ecosystem here through its cloud platform and photos, right? All of its phones, for example, through Gmail, through Calendar, through all of these little apps that it's created that it effectively has massive dominance over. It can integrate its AI into this. And whilst ChatGPT is very, very good at this specific chatbot large language model method, Google is working on a massively broad base and it's got that existing ecosystem. And people that have been quite quick to adopt using large language models into everyday life. Yeah, I mean, ChatGPT is very good for that, but there are a lot of people now that they didn't really discover ChatGPT or they didn't get into the daily habit of using it. And they're so into the daily habit of using Google that now Google are integrating Gemini into everything. I can see the little Gemini tool here right in the corner of my Google Docs that I'm looking at now. And it's this kind of integration that I think are really going to give Google an advantage. And I know that they had a couple of embarrassing moments when they initially released Google Bard, which I thought they released in a bit of a rush because ChatGPT was better. They felt like they had to release Bard and they weren't quite ready. But it seems like they're now building really comprehensive products with Gemini that are going to be incredibly useful to people. And the fact that they've already got this ecosystem of cloud and online products and their phones as well, and they could integrate Gemini into all of these, I think is really going to give Google a massive advantage going forward. If you look at Alphabet on a discounted cash flow basis, it's pretty much the only big tech stock out of those magnificent seven that's coming back as undervalued right now. And this looks pretty decent. I mean, you've got the analyst estimates, and I've put here, if you maintain 10% a year going forward, which if Google do well with their AI and they do well selling it and integrating it into their existing ecosystem, combined with continuing to grow that cloud at strong numbers, I think 10% a year for the next decade is very, very possible, particularly with what we've got with going on with AI at the moment. 24% free cash flow margins, I think that that's going to be a very achievable target for Google. They've sort of been around that range historically in the past. And putting these numbers in, you get a fair value of 171, nearly 172, and Google's currently trading at 153. So only 12% upside, but as I said, it's quite a hot market right now. And for someone like Google to be, showing upside when its big tech peers are not in this market, which is still relatively hot, is good value. Okay, so comparing Alphabet to their other big tech peers, you can see here, if you look at market cap to gross profit, Alphabet is the cheapest on that metric. It's also cheapest on forecast PE and also forecast price to free cash flow. So it's doing well against the peers. In terms of 3-year forecast annualized turnover growth, it's a little bit slower than most. Amazon is the only one growing slower, but you can also cut Amazon a bit of slack because they've got a massive e-commerce segment, which, is growing slower, but also they're making $600 billion a year on the top line. And a lot of their bottom line growth is coming from margins expanding because Amazon Web Services is becoming, a much bigger part of their piece of the pie. But given all the investments Google are making, a 20 forward PE is pretty good. And another thing to consider as well is Alphabet, they make a lot of turnover. They really do. And they have high margins. And what this actually translates into is the highest gross profit of any of these six. And then what does that allow? Look at the R&D column, right? Google spends more on R&D than any of these other companies. They've also got a lot of free cash flow, but basically allows them a lot of flexibility, right? To reinvest and to get ahead of the competition when it comes to AI. With regards to the rest of these companies, I own a large position in Microsoft. I'm very much a long-term bull on Microsoft. So let me just be clear. This video is not about, Google's the best company ever and let's make a huge investment. I'm just saying that I think they're very good value at the moment. And I think that the market is underappreciating the steps that it's taking into AI, particularly the types of AI that it's doing and how it can integrate that AI both into its existing Google, Gmail, Alphabet ecosystem and into its phone network, its Pixel products. So I've got a large position in Microsoft. I'm going to initiate a smaller position in Alphabet. I've got a small position in Amazon. I'm not quite sold on Meta. Nvidia is a bit crazy, but I do have indirect exposure to Nvidia through a very large investment in TSMC. And I've actually got a small put option on Apple, meaning that I think Apple is very expensive compared to what you actually get. So Apple's revenue, it actually shrank year on year, and they're only forecast to grow 1% on their top line. But still, as you can see in terms of PE multiples, they're very, very expensive. So I would say Microsoft is a super quality name. Amazon, I may look to add a bit more if they get cheaper. And Alphabet, I think you get very nice value, a good risk reward at the moment. And I think the market is underestimating its long-term potential in AI. Yes, search can be disrupted, but if you think about the overall pie, what AI can do, the overall pie is expanding, and actually the types of AI that Google are working on can really expose the average person to what artificial intelligence can do, and that is where the big money is for Google. I hope you guys enjoyed watching the video. I'll catch you in the next one.